Good afternoon. It's our Saturday, 3 p.m. again. I see you here. Every weekend at 3 p.m., you sacrifices your playtime, and I enjoy my learning time. And preparing this webinar is always teaches me things, so I really enjoy it. What we bring to you is nothing new. It is President Trump's tax return. Of course, not 2025 or not 2024. You are filing 2024 tax return if you filed extension, right now. So the due date for extended 2024 is October 15 of 2025. So that is coming quickly. So make sure that you file your tax return timely. And what we want to, the reason we want to bring President Trump's return out, I want to show you how the famous, the billionaire, and run their taxes. So if you don't see example, you always kind of in your small little community or in your small little imagination, and you could never ever imagine that the tax return could be done in this kind of scale. And I always believed whatever you see in life is actually, if you see that in life and you also strive to go there, if that become your goal, and you will get there. You know, I remember in my early years when I got a tax return, it belongs to a business person, and the annual revenue was 20 million. I remember seeing that tax return, so the net profit was 2 million. And that was the biggest tax return I ever seen in my practice at that time. And I said to myself that this opens up my eyes. Even though we know people make a lot of money, right? We knew that. We know the rich, the poor, we understand that. But how do you relate that definition into dollars? That's a totally different things. So you can see people live well, but you don't really connect that well-being related to how many millions, right? So when you see it and you also know that person, then that can become a motivation. That can become a guidance for you, subconsciously. So you live for a model. Every one of us do. A lot of us are following God, Jesus Christ, right? So that is a model. That is a spirit that we believe in. So when you see things, that is where you could possibly make that into your desire, and then the universe will bring it to you. So that's really what we are trying to do today, to give you that vision. Understand how President Trump filed his 2020 tax return. Of course, I don't have anything new. It's only available online. If you search for public information, that you will find his tax return. The total page is 350, but we only have like 20 slides here. Try to summarize that for you so you understand how he does his business, how he lives his life, and what kind of numbers he has on the return. Let's get going. All right, I always say let's get going, but I want to brag about Community CPA, and we are a CPA firm. CommunityCPA.com is our website. Come to our website to become our client, and we are very good at helping business people to be successful. With that said, let's look at another website I want you to know. That's a YouTube channel, and the channel name is Community CPA. We have all our webinars in here. So every time we finish talking, we have 4 webinar videos to go out every week. So on Saturday is this one. On Tuesday is another one. This coming Tuesday, on Tuesday, I'm actually going to talk about divorce. So I want to talk about how taxes play in when you divorce, when you file divorce. So hopefully you quit doing divorce. No, I'm not saying that. I just want people to be aware of what's going on, right? So you got 2 from me. Then you also have one from in Spanish, another one in Chinese, which is a choice between the 2 webinars I did, so folks will decide to translate that into what language. So 4 new videos every week, folks. So we have a lot of in storage, and you want to search our channel, find the videos that you like to see. I wrote 2 books. And the third one, I will tell you that when I wrote the first 2 books, there's no AI writing. I mean, today the AI is so different. I understand that I could write my book very differently if I use AI, but the 8 a.m. and 10 a.m. are done with the most is a spelling check. So, but the 2 p.m., yeah, I may utilize AI. I'll see how that works. But I want to tell you that I have 2 books online and you can buy them. And all the money you paid to the 2 books, I donate that to Immigrant Entrepreneur Summit. It is a nonprofit I love, and I devote all of my additional energies other than doing your tax return to there. So that is how much I care about that nonprofit. And I think it is so relevant today to make sure that the small business, the minority, the immigrants are still have the engine, still have the energy to go forward. With that said, no responsibility disclaimer. Oh yes, please know that this is a free webinar, right? So even if there is mistake inside of the content, it is probably the opinions or the understanding that we have at that time. So you always want to check the newest one. If you got a same subject, for example, depreciation, and you search for our videos, you want to look at the newest one, right? Because the law changes too, so you don't want to rely on information that is outdated. Where the information is coming from? Yes, I am talking about President Trump's 1040. And this is, we simply just take it from the public available, platform. This one, the tax return is actually submitted by President Trump voluntarily. It's not like someone steal the tax return, post it on the black website, and then Community CPA has access to the dark side of the web. No, it is public information. And the tax return disclosure is a critical aspect of transparency for public officials, right? From president all the way down to city councils, and they are all subject to public opinion. And this would allow the public to see their leader manage their financials, and also ensures that there's no conflict of interest. Shows that the leader have nothing to hide, are willing to be scrutinized just like any other taxpayer, right? So this gives us the opportunity. That's why we have the 1040. We have the President Trump's 1040. So overview of President Trump's taxes. And of course, President Trump refused to release his tax return after being elected president in 2017. If you recall, he said that he was under IRS audit. He wasn't under IRS audit, but I knew a lot of our taxpayers, when they get audited, they really don't know whether it's the state or it's federal. They just say that is I even got clients who would call me that I'm getting audited by the IRS. Then when I look at the note, it's actually state. So in this case, and he kept on saying that he got audited by IRS. IRS never audited President Trump. Manhattan DA obtained several years of tax return from Trump. So the U.S. House Ways and Means Committee released 6 years of his return in late 2022. So you see that on the screen. So that is 2016 to 2015. That was a minus. The bars, the middle bar is 0. So anything underneath is negative AGI. Negative AGI means that there's no income but losses. Okay, so those negative AGI, they add up to each other, so it will become a future tax, offset. So if you got, for example, in 2015, there's almost $30 million negative AGI. So let's say in 2016, if President Trump got $30 million income, it will just offset each other. So you don't lose those losses, and you actually keep them in your mason jar. You're going to use it on the years that you're supposed to pay taxes. So you can see that 2015, it was big loss AGI, 16 even more, 17 less, and he was elected as president in 2017. So 2018 is the first year he made money, then made some, then in 2020 it went down again. So that is where whenever you see went down, that means President Trump don't have income tax liability. So if he has bars above that line, he has income tax liability. So I want you to see the big picture of the tax return of the most famous and powerful person in United States of America, possibly in the world as well. Now, I want to mention about the bankruptcies because people kept on confused about the bankruptcy versus his 1040. President Trump filed 6 total what we call Chapter 11 reorganizational bankruptcy, which means that he actually reorganized the debt inside of the company, and so that to pay less or not pay in whatever cases, and it is a company bankruptcy that does not really impact his 1040. You're not going to see something on the 1040 related to bankruptcy. Let's say bankrupt, in this slide you can see I made a list of the bankruptcy he has. He has 1991, 1992, 1992 again, and 2004, 2009, and 2009 twice, right? So those are the years he filed bankruptcy. But on those years, even though we don't have the taxes, but most likely if you got bankrupt, like you write off that debt, then you cannot claim that again in your finance, like in your 1040. So the total write-off is close to $1.3 to $1.5 billion as estimated. And of course, I am not the accountant for President Trump. I don't really know the exact number, but these are reliable information related to president's bankruptcy. So with that said, you're not going to see $1.5 billion on his tax return as a negative because it's already forgiven, right? It is already not his liability, so not his loss, not his expense. So also with these kind of bankruptcy, normally it does not impact his personal tax return. So that is where folks will say that, well, let's look at how those bankruptcy affected him, and to really spot that on the 1040, it is difficult. Normally, you would look at the company tax return to figure out, for example, the bankruptcy he filed on Taj Mahal, and that is really a one that is an entity. So in the entity, there's other partners. So there's other investors. How that was diminished and written off, the investor just throw up their hands, goes, okay, fine, I lost it. And then, then the company would reorganize, and, President Trump would owe people less. So in that one, there's a $3 million in debt that was reconsidered. So that's a lot of money. So in total, it's about $1.3 to $1.5 billion in debt that was reorganized. And so the wealth, in one of the publications, it says that the majority of the benefit went to President Trump personally. There's no details to support anything, but this reorganization obviously is helping President Trump to stay where he is in this year we're looking at. So now, brief overview of Trump's 2020 1040. And remember the year of 2020. 2020 is the year that pandemic hit the country, right? So there's unstable years. A lot of people may not make a lot of money. I know in Trump's world, that year, there's not a lot of acquisition or expansion. It is more of improvement for the properties. So large reported losses, I'm not surprised, and no taxable income, substantial refund claimed, extensive business and foreign activities. So this is like the overview of 2020. So let's dive in. All right. So basic information and filing status. No, like every one of us know, and President Trump is married. So he filed jointly. And his spouse is Melania Trump. And the address is Palm Beach, you know where they are. And occupation, First Lady and the President. And the filing date, the date filed is March 25, 2022. So they filed late because the 2020 tax return and need to be filed by due date. But I also know that 2020 is a pandemic year, so there is an extension to that regular due date. They filed that on March 25, 2022. And here I want to mention to our small business owner that when you have a personal tax return, for whatever reason you didn't really file on time, you were late. So number one, know that if you don't owe taxes, there is no penalty. So you just want to make sure that you got all your taxes paid. And President Trump paid all of his taxes. I'll show you. He actually get $8 million, some dollars. No, he got $5 million refund. He actually should have about $13 million refund, but he kept some in the system to pay for the following years. But what I'm trying to say to you that he doesn't owe. That's why it doesn't really matter. He can file late, but there won't be penalty. So for our small business owners, I know you don't get, $13 million refund, but even if you get $30 refund, that means you don't owe taxes. Then you filed late, it's okay. So that is what I want to mention to folks. So this is 1040 return first page for President Trump. And you can also inquiry of our webinar content, the slides. You can even take a picture while you are in the webinar, but this is what on the public available website. So you can see, I know it is hard for you to see, but you look at the item, you know that, oh yeah, there's W-2 income, there's a lot of interest income, dividend, dividend, qualified dividend, and distribution, IRA. President Trump was older, so he has a mandatory distribution that he has to take from his retirement account. Then you see that $15 million big loss, then $4 million. Right there is a total income for that year. That is not AGI. AGI is following because the AGI is negative, right? So you see how that $15 million just slammed right in and taking away everything else, right? So we do understand there is a lot of business and joint ventures President Trump has. In fact, in this public file, it lists all of these companies that he has. I think it's total of about 23 pages, and I didn't really bother to count it, but there were so many joint ventures, so they bring losses to here. If you add them up, it's 15 million. But in here, I want to give you a tip right here, so let's follow along with me. This is the second page of President Trump's return, and you notice that the first line, the tax, is zero. So he doesn't have any liability on taxes. But yet, you can also see that he has withholding from the W-2. That's $83-some thousand right there. And then we will see he also paid in from, this is 2020 return, so from 2019, he already paid in 13 million some taxes. So that's why right now, and for 2020, he has no tax liability. Then you can imagine that 13 million is really available to him. He can take it back, the whole thing, but he didn't. He asked for $8 million. He asked for $8 million to be put in 2021, and then took the balance, $5 million some dollar as a refund. So, with that said, I know some of the media was really spinning that and saying that, well, President Trump got a lot of refund. And you can tell from these 2 pages that he had a reason to have a lot of refund. And the reason is that $15 million losses that he generated. So right here, I want folks to realize that the big and the famous can have a negative AGI like this. So folks who are in business have a negative AGI. That should not be something for you to worry about. Oh, is that against the law? Is this okay? Am I going to be audited? Maybe you get audited, but it's not because you have a negative AGI. President Trump has the biggest negative AGI, as I know. Other people don't publish their taxes, I don't see. But this one, $30 million negative AGI in, 2015. So with that said, and you can, as a small business owners, if you have this vision with you, you understand how the big and the famous filing taxes, it will offer you a little bit of comfort because you are not alone when business is just sucks and it's not working and you got $50 million losses. So that is where, and we see the business norm that coming from big and famous, right? All right, so let's review the income. So the major income source is from wages, right? The wages, interest, dividends, and the pension distribution. And there is other income, but it's a big negative. The wages of $393,000, that most likely is coming from Melania's modeling income or some other salaries, because most of President Trump's income is coming from the K-1. Some of his K-1, it is not passive, so he pays self-employment taxes. But this wages is most likely is Melania's modeling service. Interest income of $10 million from different bank account, K-1s, and investment. If you are in real estate business, you know that your K-1, even if you are a passive, your K-1 could have interest income on it, could have capital gain on it because you were selling properties on that particular joint venture. Then you would have your rental income on it as well, right? So those K-1s are what President Trump is having. So that is a lot of the interest income is coming from. Dividend, of course, that is from the stocks that he owns. And the pension, it is mandatory distribution because he is older than 70. And then other income is minus $15,000. This large negative is coming from his partnership losses. Like, all of these ventures that he has. All right, so that is where everything else we talked about before got offset, right? You got a positive $393,000 wages, interest income $10 million, then you dividend $25,000, pension $86,000. If you add them up together, they get offset by the $50 million losses, right? All right, so this story of income is really I believe, even though I didn't look at other rich and older citizens' taxes, rich as Trump, like Jeff Bezos, no, I don't know how he filed his taxes, but you can tell from here is that W-2 income is from Melania because she's younger, right? And most of Trump's income is from the interest and his business offset, dividend, and mandatory pension distribution. So this is a senior person in our country, the way that financial would look like if they are well-doing. So that gives you a thought, right? And so if you're young right now, you know that you need to continue grow your passive income. How many years can you work? And you want to get to where President Trump is, $10 million, then hopefully you don't have so many failing partnerships, so you don't have $50 million loss, then you really is making a good living, right? negative adjusted gross income. This negative AGI is driven almost entirely by the business investment losses, especially from the partnership and S corporation. And in the tax return, President Trump has a list of the partnership and S corporation that he has. These losses are so large that they wipe out all of the formal income that we are looking at. So in this slide, I actually listed to you of those loss drivers because you can see that the Schedule E loss is 50 million. That is from the partnership S corporation, which is true, right? And one thing I want to draw your attention, because we're talking about 2022. So what is in 2022 can create bigger loss than ever. That was the Job Act bonus depreciation. 100% of qualified asset can be depreciated 100%. That's why the Trump organization and the Trump businesses are doing maintenance work and doing improvement because all of that can be written off immediately. And then the other big ones I want to bring to your attention is when you have partnership, okay? When you got the K1 from the partnership, like this one I listed, Mar-a-Lago Club LLC. This is the partnership. I don't know other than President Trump who else is the partner, but it's a partnership. Look at what was claimed right here. Supplemental business expense, almost $500,000. So what is that? Supplemental business expense is in the partnership when your business expense did not get expensed at the partnership level. You bring to your 1040, you write it off here. So I pull out two. One is Mar-a-Lago. Another one is also have a pretty big amount. I actually couldn't really see it. Let me change my glasses, if you don't mind. That way I can read it to you. So it's a Trump International Golf Club LLC. That's another one. So basically, the golf club did not take those expenses, and President Trump take those expenses into his personal return. Those are part of the 15 million. So how does that work with our small business owners, folks? Let's say you partnered with Ying and doing a real estate investment. And you know how Ying is, and I would not allow you to do all the deductions. We're just going to say, we're going to tell you that, no, you cannot do this, you cannot do that. We're only going to count income and minimum expenses, and we're going to make money. All right. But you actually did spend money. For example, you drive back and forth, you have mileage to claim. For example, you have a home office that you're doing things for this partnership. For example, you bought things for the rental unit and you didn't even bother to tell you because she's so nasty to work with, right? So, but you can add them up. You can add them up and claim it right here on your 1040. So did you know that? So I want to show you the number President Trump did for himself so you can get a relevant ideas. So $500,000 from Mar-a-Lago Club, then the other 300,000 nearly from the International Golf Club. So with that said, you understand my point, right, folks? All right, so Schedule C losses, there's a bunch of Schedule Cs. And actually, there's quite a bit of aviation Schedule Cs. I really don't understand why it was done in that fashion. Let me give you my advice to all of my small business owners. If you have a Schedule C and you're running losses on the Schedule C, I want you to stop doing that because that is the easiest trigger for audit. Folks don't audit President Trump for all kind of reasons, right? I don't have to spend my time tell you what reason that is, but you could be easily audited. If you have numbers of Schedule Cs, all of them are losses, not good. And if you have aviation Schedule C multiple times, maybe it is a good idea to look at combining them and form another entity for it. And so with that said, and I will say that President Trump has a whole bunch of Schedule Cs, and they're all very small and really miscellaneous, and their description of the business was very vague. It's just not a good practice. I would advise these Schedule C to go away because it doesn't even do much on his tax return. But for our small business owners, I understand how actively you are thinking of doing business. You may be creating Schedule Cs every minute of your life, but you still want to group them into a structure, like a LLC, a S Corp, or C Corp, and whatever choice you made, and make those efforts into a company. So don't let that cloud your 1040 unnecessarily. Investment losses. Some of the capital losses and the business's losses write-off is in the tax return. So the negative AGI means no taxable income. So President Trump don't have tax liabilities on 2020. All right. I want to dive a little deeper on the itemized deduction because itemized deduction changed by Job Act, and it's just instead of allowing you to deduct more, and it's actually just give you a $10,000 on the taxes. But President Trump did total of $915,171 itemized deduction. So you may sit here and goes, oh, how could that happen? He took away all of these deductions. So President Trump took 10,000 maximized, allowed state taxes, and all the taxes are coming in just for 10,000. But he has a very large investment interest expense. That's 896,616. So let me relate that to our small business owners. You know how sometimes you do investment on the platform, let's say on Fidelity platform. And you can borrow money, right? You have a margin account. Sometimes you borrow money to buy stocks. That expense you have on the margin account is equivalent to what President Trump did on investment interest expense. So know that you can gather them up and fill up form 4952 and get your deduction. So that's what I want to show you. And I'm also going to show you the form 4952, okay, in the next slide. And you see the home mortgage interest, there's no deduction. And the charitable contribution, 0. President Trump did no charitable contribution. And other deductions, very minor. So instead of taking standard deduction, which is only $24,800 in 2020, and President Trump took $915,171. All right. So you can imagine that despite reporting $10 million in interest income, remember the slides I showed you, he got $10 million with change on interest income, right? The President Trump itemized deduction basically wiped that out. Am I right? Because you got 10 million, no, not wiping them out. It's actually, I wouldn't say that wiped it out. What wiped it out is other business expense that come in as a 15 million. But this deduction on the investment interest expense is related to how much interest income or capital gain he is getting, because you can't go over that amount. So what I'm trying to say here is on the next slides. So in here, I want you to look at the next slides. I'm going to change my glasses so I can see the slides with you. And you see how that 896,000, that is the investment interest expense that President Trump paid. The calculation is to compare that 10,651,526 interest income. So that was the line item on the 1040 first page. They're comparing these two to see whether they can allow that full amount. So as long as you don't go over the 10 million, then you can deduct. So that's why he got that deduction. So for you as a small business owner, you maybe have a trade, stock trading, then you got a capital gain of 10,000. Let's say your margin account is $9,000 interest expense. Then you can put $9,000 in your Schedule A. Then you can report that $10,000 on your capital gain. The $9,000 will come in to reduce that income. Of course, the given condition is that it's over the standard deduction amount, right? So you know there's a little math for you to do. So this is what happened to President Trump in 2022. So he got all of that deduction. Now, let's look at the number. This is the slides I follow. So the net investment income, Trump had $626,179 in net investment income from interest, dividends, short-term capital gains in 2020. Investment interest expense, it is $896,000. So the deduction limit is the difference between the 10 million and 896,000. So as long as it doesn't go over, the whole amount can be deducted. So if in case where the investment income is less than investment expense, the remaining amount would not be deducted in that year. It will be carried forward to the future year. Normally is 20 years. So you have time to get that digested. All right. Other tax liability still applies. This is to say that, you know how we talk about negative AGI so big, $4 million, $5 million, so President Trump don't have to pay income tax, but he still has to pay taxes. Those taxes are the following. So he needs to pay self-employment tax, which we know is $200,000. This is from his K-1, where he was listed as active member. So he does the work and he makes the money, and so he pays the self-employment tax. Then household employee tax, and he got a $4,000 some dollar to pay for some nannies at home. And you know, I look at the form, the salary is $20,000 in 2020. I thought that was too little, but you know, that's what he paid for the household employment taxes for the nanny. Additional Medicare taxes, those are calculated on Form 8959, applies to high self-employment and the wages income. So total tax liability was $271,973. This is the sum of self-employment, household employment, and other non-regular taxes. All tax liability is from other taxes, not from income tax. So I want to just sit here saying that sometimes you hear people talk about, oh, I don't pay taxes. You know, I hear that a lot from our small business owners. They come to me, goes so and so, and made exactly the same money as I am, but he doesn't pay taxes. Oh, really? He doesn't pay taxes? Do you know what kind of taxes he doesn't pay? So, you know, in business, there are so many other taxes, right? So you have self-employment tax, you also have this household employee tax, and you also can have other capital gain taxes and all different taxes, right? If you over-distributed your equity in your partnership, and you pay capital gain taxes. So all of these things are coming in. They're not income tax. So be aware that complexity behind the money you make, and know that what are the taxes you must pay. And you know, in 2020, even though we say President Trump didn't pay taxes, but that's not to say that he didn't pay any taxes. He paid at a minimum $200,000 on self-employment tax. All right, so payment and refunds. So let's understand President Trump's payments, you know, and refunds. Although, you know, President Trump reported millions in interest and investment income, their massive business partnership losses really resulted in zero taxable, regular taxable income is zero. As a result, they owe no regular federal income tax for 2020. However, they still paid self-employment tax, right? They still paid household taxes and additional Medicare taxes because they're high highly paid individual, the total taxes they paid is $272,000 because they had made over $13 million in estimated tax payment. So they actually received the refund, but out of that $13 million, the taxes they supposed to pay, the $272,000, is already paid. So now let's look at what we have. Estimated tax payment $13 million. This one they paid. Estimate just means that before you finish your tax return for this year, you pay it ahead of time. In President Trump's case, it was the money coming from the prior year, which is 2019. Okay, and federal tax withholding was $85,000. Total payment they made, which is largely coming out of the prior year, is $13,740,566. The overpayment, of course, become $13,468,000 with change. Refund, he requested a refund. He requested the $5 million with change to be his refund, and he put away $8 million into the future tax. All right. Right here. And we want to kind of make a summary of these losses for you so you understand what come out of the tax return that allowed President Trump not paying taxes. The most significant factor in his 2020 tax return is the sheer scale of business losses. Over 50 million. And a part of that, it is coming from the supplemental business expense, folks. Okay? So it is not like you add up the K1, you got 15 million. No. There are additional expenses President Trump put on his 1040. I am stressing that just because a lot of our small business owners just simply missed that opportunity. And these losses are not unusual for a real estate and investment-heavy taxpayers. But the magnitude here is extraordinary, right? So as a result, President Trump reported negative AGI and owed no regular federal income tax. And he lives in Florida, so there's no state tax, right? So Schedule E is a partnership and an S corporation, and he actually have most of the Schedule E's are actually S corporation and a partnership. And then there's there's so many entities, including real estate, golf course, hotel, licensing businesses. Many reported large losses. So, of course, some small profit. And of course, Schedule C is what I mentioned to you. He has just a bunch of aerospace, Schedule C's, but really is kind of empty. There's nothing really there. The loss is also small, so it's really insignificant. And I would say that if, for our small business owners, I would not have you have such a red flag for IRS to wonder why do you have so many Schedule C's, and just organize that yourself, right? Of course, capital losses are coming from selling business properties. Is reported under 4797 for him. The loss from investment and write-off is also another thing that President Trump uses in reducing his tax liability. Talking about investment losses, it is not limited. It's not limited to what you trade on the trading platform. Like, the stock you buy, you lost, and that's your investment losses. Sometimes, small people like us, when you are in the small business world, you might be invested $15,000 with your friend. Because your friend said that, oh, please, give me $15,000, I will pay you back. And in 3 months, because I'll make a lot of money, I'll pay you double. And you care about the friendship and you did what you did, then 3 months later, your friend disappeared. You can't even find them anymore. So you have a business investment losses. Does that make sense to you? So make sure you capture that. Don't let that go. You really did lose that. So that is a business loss, even though you didn't run the business, but it's your investment loss. So you supposedly to be able to claim it. Of course, for the investment loss, if your investment is for a domestic small business, then you can write off your losses, not being limited for the $3,000. But if you don't have that kind of credentials and your investment, the person you invest to is also another sole proprietorship, then you are going to report that under Schedule D, so you're only going to limit yourself to $3,000 a year write-off. But still, it is a tax reduction, so you don't want to overlook that, right? All right. So, foreign holding and the compliance. And I actually see a lot of filings related to foreign holdings and compliance in President Trump's return. So that tells me that it is very obvious he was following these rules to make sure he covered his business ground. So you want to do the same. So foreign corporation, he actually disclosed his foreign corporation under Form 5471. Then he also have Form 8865 for his foreign partnership. And he also identified in the form of 8938 for the foreign financial asset and the file FinCEN Form 114. He covered all the ground. And I want to say that President Trump's tax return on the foreign piece are a good example of how people with a lot of activities with foreign country and joint venture with foreign country, bank account in the foreign country should handle their taxes. Of course, there's not a lot showing up as a number because there's no tax liabilities whatsoever. A lot of it is informational. For example, 5471. For this particular company, and you can read it, it's called THC. BARA, B-A-R-A. I don't know what that is. But it was reported under his tax return as an information return of a U.S. person with respect to certain foreign corporations. So he owned the company. So those are good examples, right? And you don't want to be, overwhelmed with the form. Those forms are informational filing. And look at what President Trump put in there. They actually white out the name and everything, but you can tell that there's not a lot of information in here. So this company was formed in 2014 on January the 15th. That was disclosed on this form. So with that said, you understand if you are an immigrant doing business here in U.S., you have foreign connections, you're doing things out of U.S. As a U.S. citizen here, you have a responsibility to report all your worldwide income. Just like President Trump, you need to report. You cannot be keeping something outside and not reporting. That is against the law. So making sure that is what you do. Now, with credit and carryover, the Trump's tax return shows millions of dollars in unused business and the foreign tax credit. So because they had no regular income tax liability in 2020 and before they don't, these credit could not be used, but they are carried forward, may offset the future years. This is common feature for taxpayers, with volatile or loss-heavy kind of business operation. Real estate side of business is a loss-heavy operation. It means that even if they have significant profit in the future years, their tax bill could probably be drastically reduced down to nothing. So these are large carry forward. They have accumulated millions of dollars in unused business credit. So with that said, you heard some media says that, President Trump would never pay taxes. because he has a lot of accumulated losses. That's true. And also credit and carry forward. This is why he has a lot of ways to make money but yet not to pay taxes. But of course, you saw he did pay 200 some $1,000 taxes on the other items, right? So we're just talking about the income tax. So here is a big summary for you on 2020 for President Trump. And with that, total income is minus 4.6 million. Adjusted growth is minus 4.7. Why it is higher? Because there is half of the self-employment tax deduction that was added in. So that's why it makes the losses bigger. And itemized deduction, we talked about it. A lot of it is coming from the investment interest expense. So total tax is 271. Total payments in the system with IRS. IRS has a lot of President Trump's money. And total payment is $13,740,000. Overpayment is $13,468,593. So refund requested. So that 5.4 million went to President Trump's personal bank account, and he left 8 million for IRS to have and to cover 2021's tax return. But 2021 is a loss, so it will carry on for future years. All right. So much about president taxes, right? Now it's time for us to summarize why we even are here. So what is the takeaway, right? So now you picked into President Trump's personal finance for year 2020. You realize that President Trump filed the same return as you did in 2020. No difference. We're all using the same form. The only difference is that some of these numbers on his return were 100 times bigger than what you could even imagine. It might be the first time you see a negative AGI being so gigantic, or the first time to see a Schedule A deduction getting so large. It is all relativity, right, folks? 2020 1040 is a norm for President Trump. But having that realization is important for our small business owners. So you are not alone in the business world when you have up and downs. That is how it is in business. So now, our small business owners could learn from President Trump's return of the following item. I have 4 I want to give to you. Number 1, you could learn from President Trump's return is AGI negative is not a reason to be audited. President Trump was in negative most of the years as far as the public information goes, right? President Trump was not audited by IRS. He said he was, but he might be confused with the state audit. Okay? Number 2, Schedule A deduction can be high. Yeah, 23,000, small amount. President Trump had almost $1 million in it. Okay? Number 3, if you have a joint venture, get a K-1. Do not forget to deduct supplemental business expense. I know you don't give all your expenses to your partnership. President Trump did that for nearly all of his joint ventures. So you should understand that is your right to do as a partner. Number 4, report foreign asset, foreign tax credit, foreign entities like how President Trump did. That is IRS rules. You don't want to overlook those rules and make sure you're in compliance. With that, I want to again give you a screen of how you can talk to us. Having the right understanding of taxes, have seen billionaires' tax return, it would open windows for you if you are in the dark room. And I hope this webinar give you just that realization. Realization how the rich, the power are doing their tax returns. Now, in Community CPA, we have partners listed here, and we can come online to have a dialogue with you. If you have any questions related to your tax planning, related to your taxes, and you can talk to us. Here are the partners, and right in front of you. The last and not the least, the final slice serves as a comprehensive contact point for Community CPA, providing essential information that you should know as our potential clients. We open 6 days a week, not 5 days. And we open Monday to Saturday from 8:30 to 5:30. You pick up the phone, we answer your call as a real person. We don't run you into a robot. And you can also email Catherine at communitycpa.com to tell Catherine what you like to hear. Then we can dive in and give you the webinar. So this Tuesday, we talk about divorce. We don't want tax to be your hurdles for you wanting to get divorced. That is actually requested by one of our followers on YouTube. So we're putting that together so you know that when you're getting divorced, for whatever reason, how the tax works out, how to make that fair, right? So making sure that you follow us on YouTube. If you like our videos, and give a thumb up. And I appreciate you listening to me today. And I will see you again on Tuesday.